Hello students. So today I'm going to start the new topic from this unit 5. It's very important topic. First of all, unit number 5, bookkeeping in cost accounting. Already I have explained in my previous video this unit number 5. Today I'm going to discuss, that is, reconciliation of cost and financial accounts. This topic is very important topic. One practical question sure you will get in final exam. Okay, so this is related to practical, this topic. First I will discuss related to practical theory. Okay, so try to understand today's topic, reconciliation of cost and financial accounts. Generally, the manufacturing concerns adopt either integrated accounting system or separate accounting system for recording cost and financial transactions. Already I have discussed in my previous video what is meant by integrated accounting or integrated accounting system or non-integrated accounting system. So integrated accounting system or separate accounting system, both the same meaning. The integrated accounting system or separate accounting system for recording what? Cost and financial transactions. In integrated accounting system, that is non-integrated accounting system, only one set of accounts is maintained which contains both financial and cost accounts. In such a system, there is obviously no need for any reconciliation between cost and financial accounting. However, in separate accounting system or non-integral accounting, that is where separate cost accounts and financial accounts are maintained, the profit or losses disclosed by the two sets of accounts may differ. In such cases, it becomes necessary that cost and financial accounts should be reconciled. Thus, reconciliation between the results of the two sets of books is necessary due to the following reasons. That is, need for reconciliation. Why it is necessary for reconciliation? But before that, you have to understand what is meant by reconciliation. Students, you already this reconciliation done in the previous classes, that is class 11. If you have remember, that is bank reconciliation statement, where two books maintained, one is passbook and another one is cash book, right? It is almost same like that, this topic, reconciliation. The reconciliation means what? The term reconciliation has taken from the word reconcile, which means to tally, check, equate. Okay, the reconciliation is done to reconcile the profit or loss as per the financial accounts with the cost account. There are two accounts maintained, one is cost account, another one is financial account. Now question arises here, why it is necessary for reconciliation? What are the reasons? The reconciliation between the results of the two sets of books is necessary due to the following reasons. So what are the reasons? The first reason is that, number one, that is to find out the reasons for the difference in the profit or loss in cost and financial accounts. Right? While you prepare cost sheet, so obviously you get profit, that is cost as per, that is the profit as per cost account, And while you prepare financial accounts, that is final account, like a trading account, profit and loss account. So while you prepare trading account, also here you get profit, that which is called gross profit. And if you prepare profit and loss account, then whatever the profit you will get, that is the net profit. When you find the difference of both the profits, in this case you have to do reconcile. Okay, then the second reason is that to check the arithmetical accuracy of both set of accounts. Both set of accounts means that is cost and financial, as well as to detect what errors and omissions committed in the accounts. And then point number 3, that is to ensure the reliability of cost accounts in order what to correct ascertainment of cost of production. So these are the reasons for reconciliation. Okay, now next point arise here, reasons for disagreement in profit. Right, what are the reasons for disagreement in profit? So you try to understand, students. See, there are total 6 reasons for disagreement in profit. Okay, so you see and try to understand. First you see the first, what is given here, items shown only in financial accounts. Items shown only in financial accounts. That means what? Some items of incomes or expenses which are shown in financial accounts only, but they do not find place in cost accounts. So they are called purely financial charges or expenses and purely financial incomes. What are the examples here given? These are the examples here: loss on sale of fixed assets or investment, discount on debentures, interest on bank loan, mortgage and debentures, penalties and fines, etc. Donation and charities, taxes on income and profits, dividend paid, transfer to reserve and sinking funds, provision for depreciation on fixed assets and for bad debts, capital expenditure. Then after that, goodwill, patents and copyrights, advertisement, preliminary expenses, underwriting commissions, discount on issue of shares or debentures, etc. Also, rent receivable, profit on sale of fixed assets, these all are the incomes. Transfer fee received, interest received, dividend received, discount, commission received, etc. Right? So these are the items of incomes or expenses which are shown in financial accounts. Okay, after that, what is the next point? What are the next reasons for disagreement in profit? See, next reason is that items shown only in cost accounts. Okay, so some items of expenses which are shown in cost account only, but they are not actually paid. They are called notional charges. Notional, N-O-T-I-O-N-L, notional charges. Already I have explained in my previous classes notional charges, and such items do not find place in financial account. So these are the items where only in cost account records, do not record in financial accounts. So what are the examples here? Like rent on owned premises, interest on owned capital, salaries for self-service, depreciation on the asset which is fully depreciated in the books of accounts. Example, you see here, rent on owned premises. So rent on owner's building is also shown in cost account, which is called notional rent as an item of expenditure. These all are the expenditures where these are recorded in cost accounts but do not record in financial accounts. Right? This is the second reasons for disagreement in profits. The third reason is that stock valuation method. Stock valuation methods, to try to understand, under the financial accounting system, stock is valued at cost price or market price, whichever is lower. Whereas in cost accounting system, different methods of valuation are used depending upon the material issue prices. Example like FIFO method, LIFO method, or average method. Right? Work in progress is also valued at different methods in cost accounting system. And finished goods are generally valued at total cost of production basis. So thus, different bases adopted for the valuation of raw material, work in progress, and finished goods may differ and causes disagreement in the results. The example like here, undervaluation of opening stock in cost accounting, overvaluation of opening stock in cost accounting, undervaluation of closing stock in cost accounting. Okay, then overvaluation of closing stock in cost accounting. See here, undervaluation of opening stock, and here is what is that? Overvaluation of opening stock. So this is undervaluation, this is overvaluation related to opening stock. And here is undervaluation, overvaluation, it is related to closing stock. Okay. Then the fourth reason, absorption of overheads. Okay. Absorptions of overheads. Students, in financial accounting system, the amount of overhead actually incurred are recorded. But in cost accounting system, the overhead are recovered on the basis of predetermined rate. So see here, number A, under recovery or under absorption of overhead, where overhead charge in the cost books is less than the actual overhead incurred, which is recorded in financial accounts. It is called as under recovery or under absorption of overhead. Okay. Another, that is the over recovery or over absorption of overhead. What does it mean? Where overhead charge in the cost books is more, overcharge, that means is more than the actual overhead incurred, which is recorded in financial accounts. It is called as over recovery or over absorption of overhead. So this is the fourth reason. Okay. After that, the next reason, that is point number 5. The next reason for disagreement in profits, that is the different methods of charging depreciation. It is related to the depreciation. The methods of charging depreciation may differ in financial accounts and cost accounts, right? And may cause disagreement in profits of the two books of accounts. So this is one of the reasons for disagreement in profits. Then point number 6, this is the last reason for disagreement in profits, that is the abnormal gains and losses. Abnormal items as abnormal wastage of materials by theft, wages of abnormal idle time, cost of abnormal idle facilities, exceptional bad debts, abnormal gain on manufacturing may be shown in higher financial accounts but are excluded from the cost accounts and are taken directly to the costing and profit and loss account. This causes difference in profits as per two books of accounts. So these are the 6 reasons for disagreement in the profits of cost and financial accounts. Okay. Now I'm going to show you the format of reconciliation. Okay. So try to understand here. This is the format of reconciliation of costing and financial profit. So now you see it is very simple and very easy. Statement of reconciliation of costing and financial profit as on dash dash dash. 3 columns you have to prepare, particulars, first column and second column. Okay. This is the first column, this is the second column, this is the third column. See, here what is given? Profit as per cost account. Okay. Whatever the profit as per cost account, that you have to write directly here. After that you have to do adjust. Some items you have to add and some items you have to less. You already done reconciliation chapter in class 11. Okay. So it is very simple and very easy. These are the items you have to do add while profit as per cost account given. Like over recovery of overhead in cost accounts, items of income credited in financial account, item of expenses charged in cost account, over valuation of opening stock in cost account, under valuation of closing stock in cost account. So these are the items you have to add when profit as per cost account given. Similarly, these are the items you have to less, just opposite of this. Under recovery of overhead in cost account, here see over recovery given, here under recovery given. Here items of income credited in financial accounting given, here item of income credited in cost account given. Okay. So these are just opposite of this. This will be, you have to do less. And after that, whatever the amount will come total, that will be the profit as per financial accounts. Okay. Just 2 simple questions I'm going to show you, just 2 points. Okay. And try to understand. Say students, this is the technique to solve. Just I have taken 2 examples and try to understand. Just the impact of every transaction over what? Profit. Over what? Profit. You have to give focus on profit, remember, because here one is costing profit and the other is financial profit. Your focus should be on profit, remember. Now you see one example here taken, like expenses or opening stock overcharge in cost account. Right? What does it mean? What you have to do, just for understand, you do like this. One side is cost profit and the other side is financial profit. Okay. Now you have to check what will be the impact on profit when this statement given. Expenses or opening stock overcharge in cost accounts. Okay. Now you see, these are the expenses where overcharge recorded in cost account. That means if more expenses recorded in cost account, that means profit will be what? Decrease in cost account, right? In cost account, profit will be decrease. So what you have to do? See, cost account, profit, decrease. That means it will be opposite of this financial account. The financial profit will be increase. Now what you have to do? Adjustment. Just you have to do opposite. If cost profit is decrease, then just do opposite, increase, plus. That's all. Just you have to understand the statement. Okay. Then another point is given, income or closing stock overcharge in financial accounts. Now you see here, income or closing stock overcharge in financial accounts. That means in financial accounts, income is recorded here more. That means in financial accounts, your profit will show more, right? That means your cost profit will show less, right? So what will be the impact on profit? Cost profit will be decrease and financial profit will be increase. So what you have to do? Adjust. Here adjustment will be cost profit will be increase and financial profit will be decrease. This is the adjustment. Okay. This is very simple question, very simple topic and very easy practical. Okay. So in my next video, I will show you the practical related to this reconciliation. Okay. So okay then, thank you for today.